In today's video, I am going to be sharing with you a simple way to trade the head and shoulder pattern. The head and shoulder pattern is a chart pattern that helps us to know when a trend is about to reverse. It is a reversal chart pattern that enables us to know when an uptrend is about to end. Right? So if a trend is moving up and you want to know when that trend is going to end, then you need a head and shoulder pattern. The problem that so many forex traders do is that when a trend has developed, instead of trading in the direction of the trend, they will be trading against the trend, right? And in that process, the trend will be hitting their stop loss and they will keep on losing. But the only way that you can be able to know whether a trend is about to end or if a trend has ended and have changed to another trend is the head and shoulder pattern. So a head and shoulder pattern form in an uptrend, right? So whenever you identify a head and shoulder pattern in an uptrend, it means that uptrend has come to an end and a new downtrend is about to resume. So it is always wise for you to watch your chart, for you to be able to identify these chart patterns on your chart. According to several analysts, the head and shoulder pattern have over 85% win rate. Once you are able to identify a head and shoulder pattern on a trending market, know fully well that the percentage of the price reversing is 85. So the question now is, how do you identify a head and shoulder pattern? So that is what you are going to learn in this video. You're going to learn how you can easily identify the head and shoulder pattern so that you can join a new trend, because the sweetest part of this is for you to be able to join a trend when it is forming, because if you join a trend earlier, you will be able to cash more pips, and you know that the more pips you cash, that is the more money you make. So please, my advice to you guys is to watch this video from the beginning to the end. Don't skip any. Watch this video from the beginning to the end and you will understand the power of this simple trading strategy. So right now, I'm going to show you an example of how a head and shoulder pattern looks like so that you can be able to identify it whenever you see it on your chart. So this is how a head and shoulder pattern looks like. This is how it looks like, right? The head and shoulder pattern looks something like this, right? We have the left shoulder, the right shoulder, the head, and we have the neckline. So your entry should be at the break of the neckline. That will be your entry. It tells you that the trend have reversed. It tells you a break of structure. It tells you that the uptrend has come to an end and a new downtrend has begun because the buyers were not able to push the price higher, right? In the process of trying to push the price higher, the seller step in and then push the price lower. So that is why the price couldn't break above the head, right, forming the head pattern. So this is one of the best strategy to trade trend reversal. Once you identify this on an uptrend, know it fully well that an uptrend is coming to an end and a new downtrend is about to begin. So it looks something like this. First, we have an uptrend making higher high, right? Making higher high and higher low. Something like this, right? Something like this. You can clearly see it now. Now the price was making higher high, right? It was making higher high, higher low, higher high, right? Telling you the trend is up. then higher low, right? Then after that, the trend now makes another higher high, right? Makes another higher high, right? Now you can clearly see it now. Then after that, the trend now makes a higher low. Are you seeing it now? Then what happened again? The trend now makes another higher high. Are you seeing it now? And then what happened? The trend now makes higher low to the same level of the previous low. After that, the trend now makes a lower high, not a higher low, not a higher high again, but rather a lower low, a lower high. Sorry, the trend now makes a lower high, right? And then comes back again to that same lower low, to that same low. Now, are you seeing it now? Formerly, the trend was in an uptrend, making higher high and higher low, higher high and higher low, higher high and higher low, right? Then after that, the trend now makes a new higher high, right? And after making a new higher high, the trend now comes back and makes a higher low, right? And the next thing that happened is that the trend couldn't break above these highs again, right? It makes another highs, but this time around it couldn't break above these highs, right? And then but this time around it couldn't break above this higher high, and instead it now reverses and makes a lower low. So now what happened is you simply draw your neckline. You draw your neckline here. You simply draw your neckline here, right? So you cannot call this the left shoulder. You can call this the right shoulder, and you can call this the head. So this is what forms the head and shoulder pattern. So this is now the neckline. So if price eventually breaks below this neckline, you know that the trend have changed direction, right? If the price breaks below this neckline, you know that the trend have changed direction. So what will happen now is that the trend, instead of making higher high and higher low, will be making lower high and lower low. So once price breaks below this neckline, you see that the market structure will change from an uptrend to a downtrend. So what you will see now is this. So once the price breaks below it, you might simply wait for a pullback. Once price breaks below it, you might simply wait for a pullback for you to go in the direction of the new trend. So it will make something like this, right? Are you now see what is happening now? The price will make something like this. Are you seeing it now? Price will make something like this. Are you seeing it now? So this is what we call market structure. So if you clearly look at this chart, you see that before the price was in an uptrend, right? The price was previously in an uptrend, making higher high and higher low, higher high and higher low, higher high and higher low. Then the price makes the highest high, which is this, and the highest high becomes the head, right? The previous high becomes the left shoulder, and the lower high becomes the right shoulder. So this is where the market structure is broken from an uptrend to a downtrend. So once you identify this in an uptrend, you know fully well that the uptrend has come to an end and a new downtrend has begun. So a new strategy I want to show you is, if you don't want to wait for the neckline, right? Because once the neckline is broken, the downtrend will begins, right? So if you don't want to place a pending sell order below the neckline, you can simply wait for price to make a pullback to the neckline, because once the price breaks below the neckline, it will definitely make a pullback, a retracement to the neckline. It will test the neckline before the downtrend resumes fully. So the neckline automatically becomes a resistance level, right? Because formerly the neckline was a support level where price was testing back and forth, right? You can clearly see that the price tested it once, tested it twice, right? And then finally broke below it. Now, and the price comes back again and then retested it, right? And then went down. So when the price tested it here, it became a support level here. It was a support level here. Then it later became a resistance level. So that is why they say when a support level is broken, that support level becomes a resistance level, right? So this is the simple way on how to trade the head and shoulder pattern. Now let me show you some examples that will help you understand what I'm talking about. So this is an example. This is a clean example on how the head and shoulder pattern looks like. Now you can clearly see that the market was previously in an uptrend, right? Making higher high and higher low, higher high and higher low, right? Then what happened? The price now made higher high here and then makes a higher low here, right? So this place, the price makes a higher low, becomes a support level. Now the price now went up again, broke above the previous high and made a new highs here. So this new highs becomes the head, right? So the price now makes a retracement again back to the same support level, the same low, and then went up again. But this time around, the price could not break above these highs. Talk more of getting to this higher high. The price could not break above this high. Instead, the price went to the same level of this high and then reversed from there, right? So once the price gets to this previous high and reverse from there without getting to the high, to the higher high, and reverse from there, it simply tells you that the buyers are finding it difficult to break above this resistance level, right? We have the first one and we have the second one. So this one is the major one. So the price could not even get there, right? So this tells you that the buyers are getting weak, that the price will soon change direction. So this is what we call a break of structure, a break of market structure. So once the price makes this highs, goes down, breaks above this previous high, form a new high, then goes down again to the previous low, then makes a new high. But this time around, the high couldn't break above this previous high and then reversed down again. This forms the head and shoulder pattern, right? So the elements that you need in the head and shoulder pattern is the left shoulder, the right shoulder, and the head. So once you identify the left shoulder, you identify the head, and you identify the right shoulder. So the last thing you need to identify is the neckline. The neckline now acts as a support level, which will soon become a resistance level. So this is the neckline. You simply use a horizontal line and draw the lows. So that acts as the neckline. So what you are waiting for now is for price to break below the neckline. So once price breaks below the neckline, you can now place your sell trade. Some forex traders will prefer placing a pending sell order below the neckline, so that once the price breaks below the neckline, it will trigger their entry, right? But some traders prefer a pullback, right? They want the neckline to be tested before they can confirm that the downtrend has resumed. So what they do is that once the price breaks below the neckline, they will exercise patience and wait for the price to come back again to test the neckline. So once the price comes back again to test the neckline, that is when they will place their sell trade, and their stop loss will be above the neckline, and then they will either target their take profit 1:3 risk reward ratio, or 1:4 risk reward ratio, or 1:4 risk reward ratio. And that is how you trade the head and shoulder pattern. This is one of the simplest chart pattern that you can be able to trade, right? So your job is to watch your chart, look at your chart. Once you are in a trend, either maybe in an uptrend, you look at the head and shoulder pattern. Once you identify it in an uptrend, then know that that trend will soon reverse to a downtrend. So let me give you another example of how a head and shoulder pattern looks like, so that you understand what I'm talking about. If you watch clearly on this chart, you can clearly see that the price was previously in an uptrend, right? So when the price got to these highs, right, the price now made a retracement to the lows, right? After that, the price now went up again and broke above this previous high, right? So this high now becomes the left shoulder, right, and the higher high becomes the head. So once the price gets to the higher high, the price now reverses again down to the previous low, right? So this previous low now becomes a support level. So what happened is this: the price got to the previous low and then reversed again, heading up, but this time around the price could not break above this left shoulder. The price could not break above this high. So once the price got to this high, it now reversed and started heading down. So once the price started heading down, just know that the head and shoulder pattern has been formed. So once you confirm that the head and shoulder pattern has been formed, you simply use a horizontal line to draw your neckline. So how do? You simply draw a horizontal line at the lows, right, to connect the first and the second support level where the price came and reversed. So once you connect the lows, which act as a neckline, so what you are waiting right now is for the price to break below the neckline. So once the price breaks below the neckline, that is where you are expected to place your sell trade, right? Some traders prefer to wait for a pullback. Like if the price breaks below the neckline, they simply wait for a pullback for the price to retest the neckline before they place their sell trade, right? So once you are able to identify a head and shoulder pattern, know fully well that the trend have changed direction and a new trend has begun. So the head and shoulder pattern works during an uptrend. So you identify a head and shoulder pattern during an uptrend, right? And bear in mind that the higher the time frame, the more reliable the signal. So if you use it at a lower time frame, the signal might not be reliable compared to a higher time frame. So that is why I say the higher the time frame, the higher the signal. The lower the time frame, the lower the signal, right? So you can't compare a head and shoulder pattern that is formed on a 1 hour time frame with a head and shoulder pattern that is formed on a 5-minute time frame, because the head and shoulder pattern that is formed on a 1 hour time frame is more reliable than a head and shoulder pattern that is formed on a 5-minute time frame. So this is how you trade the head and shoulder pattern. I hope you understood everything in this video, and I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. And if you are interested in my premium video where I share my personal trading strategy, the price is just $100. If you are interested, you can chat me. My WhatsApp number is on the description of this video. Chat me on WhatsApp so that you can get a copy of the premium video. Like I say, it costs only $100. Ladies and gentlemen, that is all I have for you in today's video. I will see you in my next update. Au revoir.